Hello and welcome to Budget 2013, the Global View, a special show where top global voices lay out their expectations from the Union Budget 2013. May I welcome Russell Napier, veteran macro strategist at CLSA, Rukshat Shroff, who manages more than $5 billion through India-dedicated funds at JP Morgan Asset Management, and Atsi Seth, India Specialist Sovereign Risk Group at Moody's. Thanks very much, all three of you, for taking out the time and speaking with us today. Russell, come to you first. Now, all eyes are on the budget this year, as always. How do you view the event risk around the budget for any market? What does it mean for a market watcher such as yourself?
The important thing about this budget is that whatever step backwards are taken, and there will be some steps backward, every budget before an election has some steps backward in terms of some giveaways, some freebies, some negative impacts on the fiscal deficit. Those are things that we expect wherever we are in the world. The important thing and what rests on this budget is that we see nothing which permanently damages the movement of India to let markets work somewhat better than they have in the past and for the government to back away. So I can't be specific on that because I have no idea what's going to be in this budget. But we can all see, I think most voters can see the obvious giveaways and we can discount those and not worry too much about those. But as long as we see nothing getting in the way of the efficient allocation of capital, a savings system which is beginning to gel to get capital moving to the correct place, those are the crucial things. And as long as nothing gets in the way of that, then the budget shouldn't cause any hiccups.
Rukshat, as an FII, what do you make of all the noise surrounding the Indian budget? How much can it make or mar sentiment?
I think there are very few countries in the world where people focus on the budget as much as we do in India. So to foreign investors, it's, I don't think, that relevant. And if you look back over the last 6 months, I think to focus all your attention on the budget would be perhaps unfair on the government that has been trying to make a lot of policy changes outside the budget. The last 6 months is evidence that not everything in India happens on the 28th of Feb. Right? So we've had a number of reform initiatives, some of them quite tough, some of them quite positive if achieved and if sustained. So I think the budget is far less relevant. I mean, I can't recall what the most important thing in last year's budget was from a foreign investor's perspective, but we invested $25 billion US, the second highest on record, into Indian equities. I don't think it was budget related.
Atsi, now there's talk that the finance minister could surprise with a better than projected deficit number, perhaps even a number of sub 5.3%, that is. How much would you read into such a surprise, given that for FY14 the projected number is 4.8?
I think a surprise on the deficit front would be important symbolically because it would show the government's commitment to the fiscal consolidation effort. However, whether it's 5.1 or even a little bit lower next year, India's central government deficit hovers around 5% of GDP, which from our perspective is a higher level than other countries rated Baa3. So what we're looking for really is not the specific number this year and next, but the policies that can be enacted to move that number materially lower and closer to that of other countries rated Baa3.
Russell, coming to you, do you think this budget would be a reformist budget or a populist one, since this is the government's last opportunity to reinforce its position?
So I pay attention to the long term. So the crucial long-term thing in this budget, particularly as we approach an election, is will the government be overwhelmed by populism, or will it stick to a gradual path of liberalisation and getting the resources of India better allocated, getting the savings better allocated, getting the physical resources better allocated. So anything in the budget which sees a backtracking on that is clearly a negative from my fairly optimistic view on India. We don't expect things to go in leaps and bounds. We don't expect them to go in a straight line. But the opportunity in a budget is to persuade local investors and foreign investors that there's every reason why they should be investing there.
Right, but Rukshat, what are your specific expectations from the budget, especially on taxes from a market standpoint?
Well, if there is some clarity, I think that one of the big challenges for foreign investors is to do with, say, capital gains tax on equities. If there was any clarity or a more benign policy on that front, I would suspect that a large pool of global money that is sitting on the sidelines and has sat on the sidelines waiting to invest in India, to some extent could be catalyzed by a more permanent and a more favorable capital gains policy.
Russell, now you're very optimistic about India's macro future. What convinces you so much that India is on the right track?
A whole host of reasons we could go through. The first one we touched on, which is that the banking system has made some steps towards becoming a robust, healthy private sector banking system, unlike China. That's crucial going forward. That is the key conduit for taking people's savings and moving them into productive areas of the economy. I think the Indian savings system is also further progressed in other emerging markets in fulfilling that role. That's crucial. Politics as well is generally going in the right direction. It all depends where you start. India starts from a position where the politicians have far too much say in the running of the economy, and it's nice to see that slowly, if annoyingly slowly, going in the right direction. India is not a major export country compared to other emerging markets. I don't see the future for emerging markets being as export-orientated countries. So the changing India, or the shocks to India as we go forward with less ability to exports, is going to be much, much smaller than it is in other economies. The Reserve Bank of India has very wisely, on the whole, been stepping away from the exchange market. I think that's a very important step in the right direction. Clearly, when there's extreme movements in exchange rates, they do have to do something. But compared to other emerging markets, they're letting it be much more flexible. That, I think, is keeping the economy much more in balance than it does elsewhere. And it certainly played our role in reducing the level of foreign currency indebtedness that India has, which is still at much lower levels to other countries. That's a major, major positive as far as I'm concerned.
Rukshad, now the finance minister is confident of keeping the deficit under check for FY13 and FY14. What's your outlook on the deficit front and also targets for the same?
I'd like to make just 2 points on the deficit. Firstly, notwithstanding all the structural impediments that we have, I think there is an element of cyclicality as well. So as the economy starts to grow again, or to accelerate again, we will see the automatic benefits of that to the fiscal deficit, because it's a percentage of GDP. That's the first point. Right now we're looking at the deficit, at what we consider to be the bottom of the growth cycle. That's point one. And point two, I think it's, in our opinion, the composition of the deficit is far more important than the absolute number. So for example, if the deficit was a function of investments that we're making in infrastructure, that would add to productivity overall, that would add to efficiency, I think it would be far better than to perhaps spend that amount of deficit purely in terms of, say, subsidies, which don't even reach necessarily the people who are due those subsidies.
Atsi, do you think a 4.8% target for FY14 is a reasonable target?
So what we're looking for in the budget are really, what is policy going to do with private sector competitiveness and profitability? Because corporate revenues really are a key ingredient of the deficit consolidation process. And on the flip side, what we're looking for is, are the expenditures that can be controlled continually being controlled? We've heard some action on the diesel front, on the fuel subsidy front as well, and that certainly we viewed positively. We look for whether other additional expenditures are going to be curtailed. But really it's the drive towards growth. The bottom line is no growth, no deficit reduction.
All right, we'll take a short break on that note. Our panel is still with us. On the other side of this break, we will be discussing India's monetary policy as well as the outlook for the Indian market.